In this video, we're going to be comparing two properties similar in size and structure from Australia and the US. Now, the first property we're going to take a look at here is one that you'd have to go back at least 30 years to find at a price like this, $173,900 for a four-bedroom property, an executive style residence, as you can see here, with 2.5 bathrooms, completely renovated, built in 2005. It has a monthly rental income of $1,450. Now, seriously, this is going back to the 1980s, perhaps even into the 70s, the sort of prices that you were paying back then for a property like this. So before we take any further look at this particular property here and the sort of returns that it could be producing for you, let's take a look at the suburb of St Ives, and we're finding a similar residence here. It does have one more bedroom and 0.5 more of a bathroom, but as you can see, these two properties look, fairly similar. In fact, you could even find a property that looks exactly like that in St Ives in Sydney. And this particular one here is not $173,000. It's priced in the low to mid twos, so well over $2 million for a property, an executive residence like this, that you'd have to be paying this sort of money if you're going to be investing in a property like this in Sydney right now. Now, by comparison, in Ranger Drive, Glen Heights, Texas, which is situated about 20 miles out from the heart of Dallas itself. In fact, we can take a look at that on the Google Maps, and we can see we've entered the address in here, and here it is just down here, leading right into the heart of Dallas. So we're talking about a property that's very close to the CBD, and these are the sorts of numbers that we're looking at for this particular property. So let's take a closer look. With a gross rent for year one of $17,400 based on the $1,450 per month, we're seeing interest charges, expenses, and then our net position of $4,361 per the first year. So if we're looking here at the property value with a capital appreciation after just 1 year, we're seeing about $12,000 being added with our forecasts. Now, if we take this over 5 years, we can see that there'll be a net rental income there of $26,527 with a capital appreciation of approximately $70,000. Total projected return over 5 years is 138.77%. So let's scroll down and investigate some of these figures a little further. The first year gross return, we're talking 25.1% with a net return of 7.68%. An average annual net return of 27.75%. These sorts of figures just cannot be achieved on properties that you'll purchase in either Sydney, Melbourne or Brisbane, because the prices in the US post the GFC are at a 30-year low. If we scroll down here, we can see this example here using your own cash, right, with an average annual rent return of 15.3%. We're talking about cash flow positive properties here. This is not negative gearing where we purchase something and expect to see more money being thrown into it than what's coming back to us. You'll actually be getting cash from day one when these properties are tenanted that you purchase. And if we look at the overview here, you can stop this video and read some of these details if you want, but I'm going to scroll through it quickly because we do have a summary that US Invest use for estimating the health characteristics of a property. And as we can see down here, on a scale out of 100%, this particular property has a 95.45% perfect health. Now, all US Invest properties must score a minimum of 70% perfect health based on their algorithm, which takes into consideration all of these health characteristics: location, building quality, age of the property, a value discount, area demographics, international accessibility, employment, potential of growth, proximity to schools and facilities, recreation and sporting fields, and the political stability of the state. As you can see here, scoring several 10s and many 9s out of the property profile. So what is this going to mean over the next 10 years if you were to purchase this property today? Valued in 2015, we're seeing a value of $191,000, proceeding up for the next 10 years to $329,167. Now, if we break that down, we can see inflation adjusted value after 10 years being $244,000, so just under $250,000 if we're taking into consideration the adjustment for inflation there. But all in all, with a capital appreciation based on an initial purchase price, we're seeing an 82.25% return. Let's scroll down a little bit more here. Investment appreciation projection including net rental income. Okay, this changes things a bit as well. 96% return. Inflation adjusted after 10 years, we're looking at $341,000 in property value. So you can see these figures stack up to make this an incredible investment opportunity, and properties like this are available in various areas that pass through the property health check. It's a 62-point algorithm that US Invest utilize when examining the location, the property, and all the vital statistics that determine whether or not you'll be investing in a property that is going to appreciate, that is going to be easy to be tenanted out or rented. And many of the properties are complete turnkey solutions, which means they come completely with tenants and rental agreements up front. So there really is no other place that you should be considering for an investment property that's going to fit these sorts of statistics. Certainly Australia is in its investment bubble, and the time for that bubble to burst is very, very soon. And in fact, maybe even while you're watching this video, we could be seeing the market turn completely and values begin to become more realistic, if not drop quite drastically. So by comparison, looking at the US market, we are seeing properties that are valued way below market value that are sitting at a 30-year low point. So purchasing the right property in the right location that's fully tenanted, producing cash from day one, are the sorts of properties that you should be considering investing in, and especially at these prices. Let's just take a look at that again as we scroll to the top here. $173,900. How could you possibly purchase something within 20 miles of a major capital city in Australia? It's just absolutely not possible to do. And taking a look here, similar residence, $2 million. Now, this is the sort of property that is going to be something that you want to have in your portfolio, because as these prices rise, and they are already on the move as the US economy starts to recover, the time to consider is over, and the time to get in is right now. So if you'd like to find out more information about how you can source and purchase properties such as these and build an incredible investment portfolio, so don't delay, give this number a call, 1-800-332-102, and we'll organize how to help you take the next step. Or if you prefer, just fill in your details in the form below this video and we'll send you a free US Invest Property Investment Pack. There's absolutely no obligation, and it's yours free today. So call the number on the screen right now, 1-800-332-102. You'll be glad that you did. If not, just fill out your details in the form below and we'll get in touch with you. We'll also, in the meantime, send you your free US Invest Property Investment Pack. So fill out the form now.